When we hear about swaps and derivatives, it's easy to assume that everything is moving onto the blockchain and that the market is worth an eye-popping $1.2 quadrillion. But is that number real? Will all of that value actually transition to blockchain-based platforms? I wanted to dig deeper into this, especially after realizing that many people, myself included, at one point might not be interpreting the futures market correctly. We often hear figures like 600 trillion to over $1 quadrillion, which sound massive. So I decided to reevaluate how I understand the futures market, especially given how frequently we hear about it. To put it simply, the futures and derivatives markets are enormous largely because they include contracts tied to almost every type of financial asset you can think of. Stocks, commodities, bonds, currencies, and more. Some analysts even estimate that the total value of the derivatives market is more than 10 times the global GDP. But not everyone agrees with those high estimates. In fact, many experts argue that these figures are misleadingly inflated. Why the confusion? It comes down to the difference between the notional value, the theoretical total value of all the underlying assets in the contracts, and the actual market value or net exposure, the amount of money truly at risk. While some reports cite the notional value of derivatives as reaching over $1 quadrillion, the actual market exposure, the amount of real capital involved, might be closer to 4 trillion as of 2021. So while the market is indeed vast, it's important to understand that the huge numbers often quoted don't reflect how much money is truly in play. After taking a closer look, it turns out the number is actually closer to $17 trillion, not the previously assumed $171 trillion. This significantly changes things, and we need to reassess where we stand and determine how much of this value can realistically be brought onto the blockchain. Let's get things reorganized and properly set up. I also meant to watch a video that discusses the market for swaps, which seems to be a major focus area. A lot of people, including myself, may have misunderstood the primary use case. It's not just about cross-border payments, but rather the broader swaps market, which has a notional size reportedly exceeding $4 quadrillion. Quadrillion. Ripple's intention with XRP appears to be providing a solution for tokenizing or managing this kind of financial activity, using XRP as a tool for liquidity and bridging value. XRP is CR, designed to be fast, cheap, and energy efficient, making it ideal for handling such use cases. Since there's a limited supply of XRP, the basic principles of supply and demand suggest that if demand continues to grow and supply remains fixed, the price is likely to rise. Even short-term debt or financial activity being conducted on-chain could increase the ledger's utility and boost value. Stellar XLM. By contrast, focus is more on peer-to-peer payments and building a decentralized payment network. Initially, I thought the relevant number was $171 trillion, but in reality, the OTC futures market as of mid-2024 has a gross market value of only $17, $1 trillion, about 14% lower than the previous year due to interest rate changes. This value reflects the economic risk of open contracts, not the theoretical 600+ trillion often mentioned in notional terms. A significant portion of that is just margin or unrealized future plans that may never materialize. Still, with the right infrastructure and smart contracts, especially for post-trade processes like clearing and settlement, blockchain can offer major improvements. According to the ISDA, around $12 trillion in resources and time are currently wasted due to inefficiencies in these steps, which the XRP ledger could help address. Although crypto-based OTC futures are still in their early stages, projections suggest the sector could grow by 313% in 2025. Highlighting the potential for broader adoption and blockchain-based automation in traditional finance. We're seeing major institutions starting to get involved, and derivatives are becoming increasingly common on both the XRP ledger and the DT ledger. The technology is maturing, and governments are moving toward regulatory readiness. These ledger systems, thanks to their advanced information technology, could cut post-trade balancing costs by 30-50%, while also giving regulators real-time oversight. The conversation goes beyond just using one system. It's about when and how to transition fully. Legacy systems present challenges: lack of uniformity and the need to integrate older tools with newer ones. That transition is complicated, but necessary. The Bank for International Settlements (BIS) has estimated that derivatives represent 10–15% of gross market value. That puts the range around $855 billion to $1.7 trillion by 2030. This projection is much lower than many initially expected, which is why I felt it was worth discussing further. Now, consider how the futures market works. Most people don't really understand it in depth, and I'll admit, I didn't either at first. But once I started diving into it, things became much clearer. The reality is, getting to a high price for an asset like XRP isn't simple unless the broader market expands significantly. I asked myself, what would happen if the derivatives market shifted to a shared system using XRP, and $17 trillion moved onto the XRP ledger? What would that mean for XRP's price? Then, I considered various multipliers: 1x, 5x, 10x, up to 100x to understand the potential scale. For example, 5x of $17 trillion. Trillion equals $85 trillion trillion. 10x equals $170 trillion. Trillion 25x equals $425 trillion. Trillion 50x equals $850 trillion. Trillion 100x equals $1.7 quadrillion. These are hypothetical numbers based on how much value could flow into the system, including gets, promises, and assets that live on the XRP ledger. The true value of the ecosystem might be even higher than these figures suggest. So, could the price of XRP reach $10,000? I still believe it's possible, but far more difficult than I once imagined. The real value of XRP ultimately depends on how much trust and utility it holds in the system, and who is willing to pay for it.